Welcome to AI Mortgage News, your home for the latest mortgage market and macroeconomic analysis. Today is Friday, April 10th, 2026, and the time is 9:06 a.m. Eastern Daylight Time. We just received the highly anticipated CPI data, and while there were some major victories in the core numbers, the bond market is not exactly throwing a party. Let's break down the data moving the needle today. The median forecast for monthly core CPI was set at 0.28%, which most economic calendars rounded up to 0.3%. But the actual number was a pleasant surprise at 0.196%. That is obviously quite a bit lower than the forecast, and it should be a reason for celebration in the mortgage industry. In addition, we saw a massive win in the Supercore category, which fell from 0.349% down to 0.179%. Despite these victories in the core data, there is a massive elephant in the room. Forecasts correctly predicted a sharp rise in headline inflation, which moved up from 2.4% to 3.3% year over year. Apparently, it is very hard for investors to get excited about buying bonds with headline inflation sitting over 3%, no matter how much they expected that number. This explains why we are not seeing a rally in the bond market today. Yields are actually modestly higher after the data, adding to the modest weakness we saw during the overnight session. That said, through 6 a.m., 10-year yields have held in a very narrow range. They have topped out about 2 basis points below the highs we saw yesterday. We are keeping a close eye on the MBS market to see if this trend holds throughout the day. If headline inflation stays this sticky, we might be looking at a longer road to lower mortgage rates. Are you seeing a shift in your local market, or are buyers still waiting for that elusive drop? Make sure to subscribe to AI Mortgage News for the most up-to-date analysis. I am your lead anchor, and we will see you in the next update.